In this video, we're going to talk about Pershing Square Taunton Holdings. If you're considering about buying Pershing Square Taunton shares in your portfolio, then please keep watching this video until the end, because it covers many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $24.64 and closed at $25.12. Then the lowest point at which it fell to was $24.52, and the highest point it rose to was $25.42. Compared to the current price action, its 52-week low was $21.50, and the 52-week high was $34.10. The current trading volume of Pershing Square is 2.3 million shares, compared to the average volume of 2.7 million shares. Overall, the market is trading less shares at the moment since it is almost 400,000 shares behind the usual trading level. This may suggest that the market is currently anticipating what the major deal that Ackman mentioned would be, and if it would survive the 6-month-long negotiations. It's almost a relief to see that the stock hasn't increased its peak drastically, like what happened with CCIV at the time. The short-term trend of the stock is positive, as it seems to have recovered from the price correction from earlier this year, and will aim to go higher as the anticipation for the merger slowly builds up. Keep in mind that it is not guaranteed that a deal will go through, so make sure to structure the deal consequently. The long-term trend of Pershing Square is that it has been neutral throughout its existence, with a peak in the middle before falling back to almost the same place where it began. The market is willing to pay for a moderate amount of premium, but not the 200 or 300% that we are used to see in this kind of companies back in 2020. From the price action patterns, it would be up to you to determine if the stock still has enough steam to go upward, regardless of the company's latest fundamentals. Now, let's take a look at the market capitalization of the company, which represents how much the company is worth in the eyes of investors. Because Pershing Square Taunton is a SPAC, its market cap evolution differs a little bit from other companies. It doesn't have active operations and, for the moment, not a clear merger target either. So the amount of value given by the market is the amount of faith that investors put in the founder of the company, Bill Ackman, in his capacity to find a great merger target. Considering that the bearish market sentiment at the moment regarding SPACs, Psth managed to stay relatively intact compared to where its price has been for the past few months. So, in this regard, it is an encouraging sign. Its valuation was $5.54 billion in 2020, and it is now just about $5 billion. Another outside signal to observe is the total number of shares outstanding. Generally speaking, if the number of shares keeps increasing, then it suggests that a company is selling the equity to keep the ship afloat. On the other hand, the number of shares that it has remained constant at 200 million shares. Again, this is normal with this type of company, because it doesn't need to generate income or cover any significant operating expenses. It is an investment vehicle to reverse merge with another company, essentially serving as an instant IPO package. To summarize, I believe that it is worth a shot to place a position in your portfolio. Regarding the portion at which it should be taken your portfolio, this will depend on the faith that you're willing to put in someone like Bill Ackman, in his capacity to find the market and what it really wants, or see or hear. I personally believe that whatever the deal is, assuming that it does go through and goes public, the share price of Pershing Square will have a noticeable increase, but I wouldn't venture in saying that it'll be as significant as other SPACs. Time have changed. Given the current amount of information we have, I do believe that there is a probable chance that the deal is heading towards the right direction. Otherwise, Ackman would have stayed more vague regarding the details of it. This is why I would recommend to buy the stock between 5 and 8% of your portfolio. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting more money in this type of company. Following the stock market craze back in 2020, the stock market decided to pull back massively from the entire disruptive and innovative scene, covering biotech, EV cars, and anything requiring keynote presentations to attract capital. This wave of pullback can be explained in two ways. The market needed niches to park their capital inside to avoid getting heavy losses, and since the stock price of those companies increased multifold, many of them since decided to lock in the profits, which triggered this massive sell-off. The second reason was because the market began to realize how overly exposed investors have become to growth stocks. There are reasons why the stock ultimately collapsed for so many companies everyone was talking about. In the current circumstances, the recommended approach would be to be careful when buying the stocks. On one hand, the stock may be able to climb back on its own when the operations begin to carry the stock price. On the other, the stock may simply increase because it fell too low. This means that in the current settings, we need to tread the water carefully regarding how and when to buy the shares. Many of them have become overpriced over the past 12 months, and we need to wait for another few weeks or even month before the timing is ripe to increase our holdings. With that being said, there will always be sudden events requiring a lot of volatilities for individual companies. With that being said, there will always be sudden events that will trigger a lot of volatilities for individual companies. And this is why it is always recommended to hold a small position in those stocks just in case. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.